welcome to The Trade. Before we get into the technicals, let's have a quick look at what traders are watching and the global economy proving more resilient than expected despite acute strains from multiple shocks. This according to the International Monetary Fund. The IMF's managing director, Kristalina Georgieva, saying that they see global growth slowing only slightly this year and next. In July, the IMF raised its global growth forecast by 0.2 percentage points to 3% for 2025 and to 3.1% for next year. Meanwhile, Fed officials have agreed at their recent policy meeting that risks to the US jobs market had increased enough to warrant an interest rate cut, but they remain wary of high inflation. The minutes stating that most participants observed it was appropriate to move the target range to a more neutral setting. Off the back of those minutes, Treasury yields turned positive, investors showing though tepid demand for an auction of 10-year notes. And the dollar index rose on the day while we've got the Aussie dollar holding at 65.9 US cents. Well, the yen continues to weaken on political uncertainty. Peter Pan from AC Securities joining me to discuss. And what levels are you looking at, Peter?
So the dollar yen has reached to the highest level in the last 8 months. The main reason is political. The Senate Takahashi won the party leadership election, making her the next Japanese prime minister. And she supports both fiscal and monetary easing, rising market fear that Japanese liquidity will float again. So traders have started what is called Takahashi trade, selling yen and buying Japanese equity this week. However, at the same time, the Japanese government bond yield is climbing very fast. The 10-year bond yield has reached 1.7%, which is the highest since 2007, which has showed both yen and bond are being sold. But this entire movement is based on expectation for aggressive fiscal easing. Historically, we have seen that when bond yields surge, the government may tend to slow down political stimulus, just like what Trump's do in early this years. So, for example, if Takahashi signal a slowdown in her easing plan for showing support for a bank rate hike in October, or like slowing the stimulus, the yen could rebound sharply. So to bet on that view, I will consider short position at higher level in dollar yen. So I will looking forward around chance around 153 to 154 with additional short entries once the dollar yen breaks below 152. My target will be 149 level, which is a key support turned resistant area and the main target for my all short positions.
All right, let's get into what we're seeing with the Nikkei 225 then. So a little bit of a pause here, the topics at records, but you know, the run up that you saw in Japanese stocks following the election, extraordinary.
Yes, just like the yen, Japanese stock market could also give back all of this week's strong gains if Takahashi retreats from his stimulus plan due to surging bond yield. And also, in addition, the Bank of Japan has announced plans to sell its stock ETF holdings. Although it claims the process will take 100 years and have little impact on the market, but the negative sentiments is still likely to weigh on stocks. So these factors together to lead a market pullback. So from a technical perspective, the Nikkei 225 is holding now near 48,000 level after a mild rise driven by the US stock yesterday. The traders could consider small short position around this level. However, since the timing of Takahashi's policy shift is uncertain, higher level short may carry higher risk. A safer strategy is to wait for a break below 47,700 and entry, and after that entry short position. The downside target may be 47,300 or even lower to 46,000, where profits can be taken in stages.
So let's move on then to gold, Peter. I mean, quite extraordinary, this breach through 4,000. A lot of calls though now that you will see profit taking. What are the technicals showing you?
Okay, recently gold is very strong. It is mainly because of a lack of confidence in fiscal sustainability across major economies. Countries like Japan, France, and even United States has been struggling with the fiscal expansion under tight monetary policy. However, in short term, there may be some reverse in those political standards. So if that happen, or if like this morning, the Hamas and Israel has signed a ceasefire agreement, so these may all reverse the gold price in short term. But for longer term, since the underlying debt problem, especially in the United States, remain unsolved, gold still has strong long-term support. So from technical views, if gold remains in an uptrend, as long if gold remains above 4,000, we will still hold a long position in his uptrend. But if the price break below 4,000 on any reversal news, the next key support is likely to be near 3,900, where buyers may step in again. So the 1 month target range remains around 4,100 to 200.
All right, and a quick word on oil as well. We are sort of seeing a lot of focus on US demand, but also the worries about Russian output here too playing into the oil market.
Yeah, so recent developments in oil market is very complicated, but can mainly resolve around three key factors: the US dollar, the OPEC production plan, and the ceasefire talk between Russia and Ukraine and Israel and Hamas. So that's why this morning the oil price dropped with the gold price this morning. But for this week, the US dollar kept rising, and OPEC output increase was smaller than expected, which both support higher oil price. Since the Israel government has not yet officially confirmed any peace agreement, I think there is still some support for crude oil price. So from a technical perspective, the trend line around 61.4 to 61.7 range remains a good entry zone. However, the rebound momentum may not be very strong, so it is better to, for the long position, it is better to take profit around 62.5 to 63. And then we will observe how the dollar and the ceasefire agreements will develop further.
All right, Peter, always a pleasure. Thanks for bringing us up to date with all those key technical indicators. Peter Pan there from AC Securities. That does it for this edition of The Trade. Be sure to join us next time.